the bullet strategy and how we trade it in the Gorilla community. So the bullet strategy has come about from a lot of back testing and my experience within the market. So what I noticed, because of the unique way that we manage our trades, what I kept noticing is that price action kept coming back to a certain area. And once it come to that area, it would shoot off. Okay, and I came more and more aware of this the more and more that I was back testing and the way that we manage our trades. So let me quickly show you what we look at when we want to get in the bullet. So for example, we have this large trend up. Okay, so the large trend up, markets are moving upwards, and then what we do is we have a counter trend move. Okay, so at this point we know that this is the major high. Okay, and we don't know whether that major high will be broken yet. But if it is broken, then we can confirm that this is our low. So for example, at the moment, this is our low. But obviously, until we break that high, we don't know where our lows are. So for example, as we then go and break that most recent high here, or the major high, we then confirm that this is our low, right? Because it's the lowest point once we broke. So when we was looking at this and the way that we manage, so what we do is as soon as we break the highs, we move our stops below the most recent low, okay? And then as price continues and the way that we manage it, price then comes back and goes up again. We then move our stops. Once we broke this high here, we move our stops here if we're in a trade. And this is what I kept noticing because of the way that we manage. I kept noticing that when I was in a trade, right, price action would come back to this high level here and it would almost instantly shoot off, right? And it became more and more apparent because of the way that we manage our trades. So I started digging deep into this and working out, is this actually a strategy that we can use? Because if we know that a market is coming counter trend and we know that majority of the time it bounces off of this area, then we can use this to benefit us in our trading. So this is how the bullet came about. So obviously, once I realized about this, I then really dug deep into back testing, checked it out, and really dug deep and worked hard on this strategy to make sure that the strategy was viable to use for our community. And as we back tested, we were absolutely blown away with the results that we were getting. Because you're getting into the market on a move that's going downwards, right? We then got into that market and almost instantly it would go up. And another key benefit, so for example, say we took this trade here, right? And we have our stops down here. As soon as we break this high, we reduce our stops almost instantly. And it's almost like, to be a consistent trader, you have to manage risk. And this is exactly what we do with our trading. We manage our risk. As soon as we break that high, the risk is managed pretty quickly. Now, another benefit from this is that if we do get a market, for example, that breaks up, right? Comes back to our level. We get in at the bullet, okay? Now we know that we have a trade here. That's our stops. This is our trade, okay? Now, as soon, this is another key benefit for this strategy, is that when we break that high, okay? As soon as we've broken that, we reduce our stops. Because sometimes when we break a high, we don't know that it's going to continue. And sometimes what happens is we break the high and then drop, right? Almost instantly. So if that happens, it allows us, even in a corrective market, to reduce our risk significantly. Okay, because we don't know where the market's going. The market decides. We know that we're on an uptrend. Okay, we follow that uptrend, but we don't know how long that's going to last for. And as soon as the market breaks that high, we've reduced our risk massively, almost to break even most of the time. So obviously, if it does decide to correct and pull back down and take us out, that's completely fine. Majority of the time, we will have 0.1, 0.2, or 0.3 risk on the table, which means you can have 3 or 4 of those losses. That adds up to a 1 full % risk. So these are the key benefits. So as we are trading, this is how we were looking at it. We're looking at a trend. The trend is on an uptrend. We then look at how we break the high. I like to see a nice push above that high and then a pull back to that level. Now, again, everyone will have to back test the way that they do it, because some people, they don't mind if it just breaks and pulls back. They're happy to take that risk, knowing that when they're on a trend, that they're going to continuously milk the market, right? But for me, I'm a bit more conservative. I want to see a bit more of a break and then a pull back to that level. Of course, we also use this for scaling in. Now, when we're scaling in, it's easier to get into the market, and I don't mind taking that risk because I know that I'm already in profit on my first trade, or that first trade is above break even. So to scale in, if any of you haven't watched it, please go back over the scaling in video. And it teaches you there that we want to get into the market as much as possible. So if I'm in a trend and it breaks up and pulls back, I'm getting straight back in, knowing that majority of the time, the trend is going to continue. Okay. And also if the trend doesn't continue, we know that we reduce our risk significantly as soon as we break that high. Okay. So this is how we are looking at the bullet position. Now, let me just quickly show you what we're looking at when we come from a descending or ascending nature. So they are continuation bullets. Okay. So that's already when you're in a trend. Okay. But also what we look for is when the market is coming down descending, right? We know that the market is trying to go down and it can't be sustained, right? Because it's breaking a low, it's pulling back, breaking a low, pulling back, breaking a low, pulling back, breaking a low, pulling back. We know that majority of the time, this is showing us that the trend down is being exhausted and that it's more likely to go up. So what we do is we wait for the trend to change. Why? Because we let the market show its hand. We want the market to show us exactly where it wants to go. If it wants to continue going down, it can do that. But if it goes up here and we have this trend change now, we now know that we've had this descending nature. We know that the market is exhausted. We've now had a trend change. So if the market pulls back to this level, right, we know that it's high probability. Not only is the market exhausted and it's the first trend change, but knowing that the trend has just changed and we've got into the market. So if the market decides to continue trending, you are going to be at the beginning of that trend. And this is why most people that get into these high probability positions are happy to scale in after. Why? Because they know that we are at the bottom of the trend, and most of the time you'll get a continuation of that trend and you're more likely to take quite a lot of percentage out of that market. Again, realizing that when we break this high here, we reduce our risks massively. Okay, and that's one of the key factors of being profitable within the Gorilla strategy, is that we manage risk. Let me show you now what it looks like when we're ascending. So if we're going up, pulling back, going up, pulling back, going up, pulling back, what is that showing us? It's showing us that the market is trying to break highs that can't be sustained. So then what we do is we wait for a trend change, okay? Because at this point, the market is still on an uptrend. It can still shoot up. So unless we get that confirmation of the break of this low and then a pull back to that level, okay, then we are happy to take that trade, knowing it's high probability. Okay, so knowing that, we are very happy to get involved in it. Knowing, again, like I said to you, we know that the trend to the upside, it can't be sustained. It's showing us that it's exhausted. Then we have a nice trend change and a pull back to that level. So that's the first pullback of that trend. And if we get in this position, it's likely to be the highest point of that trend. And as the trend continues, we will be at the best position with minimal risk. Okay, so this is the bullet strategy. What we also have after this that I wanted to get into is a refined version of the bullet. So what do I mean by a refined version? Well, what we look at now is the most recent highs and lows. Okay, so what do I mean by that? Well, if we have this move up, like we just had in the same example before, but sometimes what happens is when you have a counter trend move, you have a bit more of a range within there. So you'd come down, pop down lower, then you'd get a little range within here. And then obviously what happens is we then break that high. Okay, so as we can see, it's still our strategy, but all we've done is refined it slightly. Because where you before would have had this as the major high, and you would look to get involved in that, what we noticed is that if we look at actual price action, sometimes we have a most recent high and low within that range. So how do we determine that, and how do we look for it within the strategy? Well, if you look at price action and you follow price action from where you have broken, so now that you have broken that, you then go backwards, okay? And you see there's a low here. So that would be classed as the most recent low, okay? And then we go back up and you find a high. That would be the most recent high. So what we've done, and we've noticed that happens over time, is rather than set a pending order above this level, okay, the major highs, we then now have refined it to the most recent. So you would now set an order at this level, which would be slightly lower, and you would wait for price action to come here and then shoot off. Now, for me, I find this version of the strategy a lot better. Reason being is that most people that trade support and resistance all trade off this level. So sometimes the market makers or the money managers or whatever you want to call them, what they will do is they will push it slightly lower. Take out these people's stops. They may have a 10-pip stop here, take them out, and then we are in on that position. And again, this is just something that is a revised version with something that I use, and obviously it's through my own experiences. Now, we still have people within the community that is using the major highs and lows. And there's no right or wrong. But what I want to do is show you all versions of the bullet so that you can get involved in it. So this is how we are using the most recent highs and lows. So what I do now is show you how we do that on the downside. So for the downside, we see a trend down. We then see that counter trend move we saw earlier, but then we start seeing a little bit of a range before then we break this major low. Okay, and very similar to what I said before, we look at current price action. We then go back on current price action to find the most recent high, and then we go back again to find the most recent low, which would be here. So now, instead of having our pending order below this major low, we're now looking to have it here. And you can see sometimes it's a significant difference. And again, for me, I found it works out better because most people are taking it off major lows and highs if they are using some sort of support and resistance. So for us, rather than getting into this position, we get in slightly higher and then drop, right? Because what this then allows us to do is to get in a better position. And normally these people that got in at this position, they get stopped out, right? Sometimes it works, sometimes it doesn't. And you have to remember is that when you're trading these, I would prefer you to trade only one version, because sometimes it will bounce off of this one and sometimes it will bounce off of this one. But I want you to have no discretion in your trading. So you have to back test both of these and work out which is better for you. Go through the data, and whatever part of data you prefer based on your personality type or based on your trade plan, please stick to that, because sometimes this one will work out better and sometimes this one will. So it's about going through the back testing and working out which one you prefer and which one will benefit you more. Okay, so this is how we trade the most recent highs and lows. After this, we then had another revised version, which is using the inside bar. So it's very similar to using the most recent highs and lows. But what we then use is now an inside bar. So if I show you this version, price goes up, we then get this counter trend move, okay? And then what we have is we have a move here where we have an inside bar, okay? And then we have a continuation, right? So what do I do in this situation? Well, as you can see, most people then would come back and they would see this as the low, right? And they would see this as the most recent high, right? Because that's what we're looking at. But with the revised version, with the inside bar, because this bar is inside previous bar's price action, what we then do is we see that it's counter trend on both sides. So once we break a high, this would be the high and this would be the low, right? So what I'm looking at now is for price action to come back to this high and not this one, right? And this is just a revised version. So as price action comes back down, I now look for the inside bar and I then get involved in that, right? And again, there's no right or wrong answer. You don't have to use the inside bar. I use the inside bar because for me, it shows me a counter trend move on both sides, which in a lower time frame would show you a counter trend move. So that would be a high on a lower time frame. But we only use the 1 hour time frame. So what I'm teaching you here is how to master trading a lower time frame on a higher time frame. So we only ever trade the 1 hour time frame. But what this is giving us is it's giving us a refinement. The inside bar is a counter trend mode on both sides. So what we do then is we get involved in the high here. Okay, and that is what we look for when we are trading the inside bar bullet. So the same goes for the downside. We have the same move down. We then have these counter trend moves. Okay, we then have a move down. We then have this inside bar. And then we have another move that comes and breaks the low. Okay, so as you can see, what does that show us? Well, it shows us that we have, if we go back from current price, this candle hasn't broke the previous candle's high or the low. So we can mark that as the highs and the lows of that candle. And then what we do is if price comes back to that level, then we get involved. Okay, again, understanding this is just a revised version. You can trade any of these versions of the bullet, right? All it is that I've done so much back testing that it benefits me to obviously trade this way. Now, what I want everyone to do is to go back and back test all three versions and work out which version suits you. One thing I would highly recommend is only sticking to one version. Don't trade different versions of itself, because the problem comes in there. You start adding discretion in your trading, because one day you're trading the majors, one day you're trading the inside bar, one day you're trading the most recent highs and lows. And then what's going to happen is you're just going to keep confusing yourself, right? And that's not what we want to do here. We're trying to give you a strategy which we've refined. Now, I only use this third version, which is the inside bar version, because for me, each one of these have been a refinement of the first strategy. Okay, so now you're seeing what I'm trading with, which is the inside bar.